Hi, folks, and welcome to what I think is a fairly important issue of money in politics. And I wanted to go over some of this big news that we've had today on the 25th of February, 2021, regarding Humble. We've been waiting for a lot of news, and it certainly came out. Unfortunately, it came out on a day when I was kind of out of the loop. So I'm recording this at 9:30. I was going to say on the fly. I'll just draw on my past, but I don't have any script like in front of me, so hopefully I won't ramble much. First things first. I wanted to say that right about 2 hours ago, and I literally just got back from driving 7 hours round trip to Chicago to do an interview with a congressional candidate. About 2 hours ago, roughly 7:30, I would guess, as we are taping this, George Sharp came out and said with a tweet at 9 a.m., meaning on Friday, TSNP will issue a press release providing details of a Zoom shareholder call. The shareholder call will take place at 4 p.m. Central, 5 p.m. Eastern, and you can do the math. That would be 2 p.m. on the West Coast. During the call, we will discuss today's corporate actions, provide updates, and make a huge announcement. Let the guessing begin. Well, I don't know what it is. There's one thing I would guess is that they're releasing the app. That's one thing, which they said they would do in February. Tomorrow's February 26th. So that certainly might be it. Something I don't know, but I want to know about and has to be addressed. What about forwardly? What about the warrants of George Sharp that he has on the stock of Humble going forward? So that's something I want to know. I probably can't address in this video right now all of your questions, but let me get to some of the basics. And I've talked to a couple of people just as I was driving down, some friends who I said to buy this, told them to buy the stock, and they're not sophisticated investors, and were asking me just some basic questions. So let me give you what a reverse split is if you don't know, because again, this channel is for new investors. And then I'll also give you my thoughts. Very quickly, a reverse stock split is done for two reasons, and I'll tell you what it is in a second here. It's done either to boost the price, kind of, you might say, artificially boost the price of the stock as compared to market action. And the second reason that you would use a reverse stock split is to get rid of shares. Now, a lot of times when people do a reverse stock split, it is because their share price has fallen so low that they're in danger of being delisted from an exchange. So let's say their price may have fallen from $6 down to $2 or $1.75 or something, and maybe they're going to get kicked off the NASDAQ, so they do a reverse stock split to raise their price. That's one reason. The other reason, as I said, is to cut down on the number of shares outstanding. And I'm doing this a little out of sequence, but let me stay with this for a minute. So the reason that Humble did it, in my estimation, I'm reading between the lines, I'm not part of Humble's management. The primary reason I think Humble did this was because when they took over TSNP, this flooring company had like 4 billion shares out of stock. Well, that is a ridiculous number of shares out there. I had someone tell me tonight as I was driving, so I'm relying on what they reported to me, that PayPal only has like 1 billion shares of stock. So for this flooring company that Humble merged with to have had 4 billion shares kind of gives you an idea of just how silly that was. I am in favor of this reverse stock split. Why? Because they needed to get rid of the excess shares. That was a drag on the company. And I was trying to use an example with a friend, and maybe this works for you. It's kind of like Humble took over the flooring company, Tesoro Enterprises, TSNP, and they moved into the factory or the warehouse where TSNP had operated. And You know, the humble people went about setting up their computers and their furniture and getting started and doing everything that they're doing. But, you know, they were waiting for their name to be put on the building, and they had the warehouse filled with all these boxes of linoleum. You know, well, obviously they didn't need those. And before they could really function, they had to get rid of the linoleum. Maybe this is a poor example, but remember that Humble just merged in December and they were getting themselves to work. And now, as we are getting the announcement that we're going to have HMBL is going to be the stock symbol. And again, this was reported to me, I believe it's March 20th, if I remember what I was told right, because I was getting some information while I was driving back from Chicago. I believe it's March 20th, and I apologize if I'm wrong. You all may know this more than I by now. And in the meantime, the share is going, or the ticker symbol, as George Sharp mentioned in his note here, is going to be TSNPD. I don't know why we just don't stick with the other pre-existing, but whatever. So we'll hear more tomorrow. I had mentioned in an earlier segment that I do here, and I tried to find it briefly and I couldn't find it because it's already 9:30 here and I want to get this going. That I wasn't worried about the float, but I wasn't worried about it, as I said at the time, because there's a number of ways you could get rid of that excess, those excess shares. And one of them that I mentioned in that video was you could do a reverse split. Now, somebody on Twitter said words to the effect, I don't have it in front of me, that I'm trying to look and see if I can find it, that a reverse split is the mark of a bad company. I disagree. It can be the mark, it can be, but it's not necessarily a bad company. Now, that said, I endorse it. I think you had to, as part of taking over from TSNP, Humble has to get themselves the name on the door. They've got to, get their own ducks in a row. They've got to do this corporate maintenance, and that's what we're seeing. Okay, I kind of spoke out of order here because I wanted to explain at first what it was. So now that I've talked about it, let me explain what it is. If you had 10,000 shares, and let's say the stock price was $2, to make math simple. If before a split you had 10,000 shares at $2, you would have $20,000. A reverse stock split is going to say, now it depends how many. In this case, as Humble is doing, 4 for 1. So let's say we had a 4 for 1 on 10,000 shares. That would mean the next day you wake up and instead of having 10,000 shares, you have 2,500 shares because they got rid of 3/4 of the shares. So you have 2,500 shares, but you don't lose any money. The price per share goes from $2 to $8 in that example. In other words, if it's a 4 for 1, what they do is they multiply the price where it was before by whatever number. If it's a 2 for 1, they double it. If it's a 4 for 1, they quadruple the price. So if it was $2 in my example, it would go to 8, and your share count would go from 10,000 to 2,500, which means you still have the same $20,000 you had before. Now, why is that good? Because the other thing is now that the price, we're going to start trading, I believe George Sharp said in an earlier tweet, I don't have it in front of me, as I recall it was going to be opening on Friday at 324, 325. I hope, no, here it is, here, I got it. Based on today's close, tomorrow's starting price will be $3.40. If it trades at $3.45, it will be up a nickel. So we got to get accustomed to that. So based upon where it closed today, which was 85 cents, it will go up by 4 and open at $3.40. I had also said in an earlier taping that this is like a 3-stage rocket and we're just in stage 1. And that we have to get the share price up because a lot of people who are money managers, pension operators, mutual fund operators, they're not going to buy a penny stock. And those people, a lot of you may be familiar, Kathy Wood is often mentioned these days. It doesn't matter about Kathy Wood, but let's say you're running a $5 or $10 billion portfolio, and you want to invest in something. You're not going to invest in a stock that's 90 cents. You know, and you can come in now that we got the share price up, so it's going to be starting at 340. We get to, you know, $4.50, $5, $6, and if you go by the split, when we were at $1.25 before, and we were just about a week ago, I guess, that would be the equivalent now of $5. So you get the stock price up $5, $6. That's where some of these big money managers will go in, and they'll start putting some money in. And they're not buying like you and I might buy, where you buy 1,000 shares or 10,000 shares. They're going to come in with some big money. And that's why we'll get the value out of Humble is still in the future. I'm going to remind you of what I just said the other day, and it's still true. We're buying the future. We're not buying the present. And to George Sharp, to Brian Foote, to all the guys at Humble and Forwardly, I'd like to hear more about how that works. But for all the people at Humble, they're still the good people that we invested in before. And I think that this is going to end up, in the long run, being very beneficial to the company. Not only that, I think it was absolutely necessary. The one thing that kind of surprised me and caught me off guard, I just didn't expect it to happen this soon. I thought they might have gotten a couple more ducks in a row and maybe done it in April or something along those lines. Look, folks, see, it might sound sexy that you have 10,000 shares or 100,000 shares. And that is exciting. You know, you go to your friends, hey, I got 100,000 shares. But I just want to make absolutely clear, and I know a lot of you already know this, but some of you may not. You're not getting screwed out of any money, okay? Financially, it's the same amount of money you had before, because the share price is up. The number of shares that you own will go down, and the company will not have that legacy of all those shares that they inherited when they took over TSNP when it was a flooring company. Okay, so that's kind of where we are. I could go longer, but I'm going to pop this up. It's already 20 minutes to 10. I just kind of wanted to, if you hadn't seen, that's why I did send literally a tweet out in the middle of an interview that this is not a bad thing, it's a good thing. But now that I'm back, I wanted to get on the air as quick as I could and give you my thoughts. Hang in there, folks, would be my advice. Don't, you know, one guy, I'm selling all my shares, I'm not going to deal with this. I think we need to all listen to what they're going to say tomorrow at 4 o'clock Central, 5 o'clock Eastern. And, you know, listen to what Brian Foote and George Sharp and the rest say about their corporate actions and why and what the announcement will be. In the meantime, as always, thank you so much. Oh, I meant to say, and I don't have it available right now because I was rushing here. This morning, I hit 3,800 subscribers, and I wanted to thank you so much for that. Unbelievable. I literally, today is the 25th. It's been exactly 1 month since I did my first video, and it's been an amazing reception, and you've been so kind with your comments. So thank you for that. Thank you for that. And I'll try to cover tomorrow's announcement. I presume I can record it, and we'll go from there. Good investing, everybody. Thank you for listening, and I'll talk to you soon.